Hi, Warriors. Good turnaround Wednesday. Hi, Shahab, Ugo, Alexander. How's everyone doing today?
Morning, Dale.
There's my buddy Ryan. How are you, man?
All good, mate. You cooling down yet?
No, not till the weekend. Anyway, just maybe a few days left. So the Japanese peso continues to plummet. Huh?
Japanese lira, Japanese lira, Japanese drachma.
Yeah. What is it anyway?
Good morning, Dale.
EM currency.
Yeah,
Did you just say the Japanese drachma?
Yeah. Starting with Japanese peso.
Dude, that's a low blow, especially that we've got Greeks here online right now, Ryan. That was a low blow.
I remember
completely forgot, honestly.
I remember buying a loaf of bread for like 10 drachmas years and years ago, which is something like 2 cents, I think now.
Oh, wow.
Yeah.
Wow.
Anyway, what did drachma mean? What was the translation?
Don't know. Steve will know.
Worthless.
Huh?
Yeah. Worthless, yeah.
So Europe, what's going on in Europe? There's a euro. So ECB anticipation. What are you guys thinking here?
It's holding up pretty well.
Yeah.
I think we're in the orbit of the Fed. I mean, you got cable collapsing, you got dollar yen ramping higher, dollar up virtually against anything, and yet, we're 20 pips off that 99 level and gyrating sort of 20 pips plus minus. Very telling. Very telling.
The cable is almost at this channel, and when I drew it, I go, oh, wow. I thought it was going to stop at, 118, 117, but it had room to go down here. Not confirming. I wouldn't, I'd rather be long euro than cable, but I don't think I'd want to be short cable anymore down here. Look at this. See this. So, I want, people think that, you use RSI mainly for divergences, but, knowing when you have a confirmed high or low is as valuable, even more valuable, because that keeps you with the trend. And anytime you have a confirmed high or low as a trader, you should be looking, if confirmed low, well, I have to look for a place to get short, because the probability of another low is high because it's confirming. So when it's not confirming, that's a different story. It doesn't tell you to reverse, but maybe to cover. So, just something that, another way to use RSI, and you get many more examples of confirmed highs and lows than you get divergences. So just something to keep in mind. It sounds simple, and it doesn't give you the entry. That's when you have to go to your, your playbook and look for other things that, tell you, retracements and moving averages and where you'd want to get back on the trend if there was a correction to offer you that type of opportunity. But just keep that in mind, that confirmed highs and lows are a valuable thing to recognize. So that's my lesson for today. So what do you do in here? Just sit, wait?
I'm sitting and waiting.
Yeah, okay. Kman?
Good morning, Dale. Good morning, everybody.
I'm sorry, Ryan, did you want to finish your thought?
No, I was just about to say I've had a few small tries of trying to break in euro dollar under 99. They failed. I had a try last night into 143 short dollar yen. That failed. When you start trying to pick those tops and bottoms or breaks or whatever and they're not working, someone's just got to sit on your hands and think, let the market do its thing and come back.
In the euro, I have a return line down under 98.5. So wondering if we're going to get there during the presser. When is it? Tomorrow?
Yeah, it's tomorrow.
Okay. I've heard people talking, under the 98 handle.
Yeah, 97, 96, 95, you name it. on the opposite side. I'm worried about the euro, and I really thought we would go into the ECB tomorrow because they are expected now to do 75. I really thought we would go into tomorrow rather around parity than around 99 or below. Okay, we still have 24 hours, but I'm a bit worried about the euro that unless ECB talks about screwing back on their QE and start to really do QT, I'm a bit afraid that the euro is not even going to hold. The dollar is so strong right now. Of course, I mean, never say never, but really,
Yeah.
I really thought euro should have been a bit stronger going into the ECB with the expectations. So I'm not a big fan of euro yet, especially with all the rest still hanging around. And as far as dollar yen is concerned, a lot of targets around here, 144.90 figure, call it. On the technical side, RSI, as you show, somebody in the room just said, some of the RSI for yen is at 1.7 or so.
Yeah, it depends.
So
If
I asked jokingly, can RSI go negative? But it's really okay. I mean, if we look
91,
at
90.
yeah, if we look at the yields, dollar yen did 200 points without US 10s pushing any higher. So I do think we are in show me what you got territory to the MOF. But where is it going to stop? I'm just trying a technical little short here, but I'm really not going to fight it if 145 blows, you know, decisively. Okay. But of course we have to be careful because the Japanese cabinet is now talking about the move being one-sided. So we always have to be careful. But for the time being, it's only going to be interventions seemingly stopping the advance of the dollar yen.
So people are bragging about, you know, everyone, Kramer's going to Europe to buy Italian suits and everyone's going to Europe to buy things cheap. Can you do the same thing in Japan because of the weakness in the yen? Going there with dollars?
You could give it a try, yeah, but then your airplane ticket will cost you probably much more than before.
Yeah, there's always some type of catch.
I'll ask my son who is there.
All right.
Things are much cheaper over there, and he can send me some stuff over.
You know, guys, I heard from I saw a video yesterday, and I hardly check the futures anymore. But the guy was saying that silver's in backwardation, which is, you know, kind of unusual for a market that's been, you know, on the decline. And that's bullish compared to a carrying charge market, if anyone wants to confirm it. And then I just noticed this, you know, yesterday we tried to get over the wedge line and, you know, held, and here we are right here testing it again. So, I mean, threatening. And, you know, this gold silver ratio, if we have a negative week, you know, which would, if we could take out today's lows or something, look at this divergence. That's pretty glaring. I mean, you don't have to put your, you know, when people ask me, well, you know, what are the best divergences? The best divergences are when you don't have to put your cursor there to get the reading, that you could just see with the naked eye that it's, you know, it's diverging. You don't have to measure it or know.
That's a good rule of thumb,
isn't it? Because there are many times, Blake, you know, where, you know, like here and here, you're it just missed a divergence by, you know, 2 points. But even if it had, first of all, it's over 70, and second of all, it's not much of a divergence if you have to go check out the numbers.
Yeah, I agree with that. And actually, you know, you can see that on a few different charts right now. And I think one of the big ones in here, if you don't mind, I'm going to take over the
I never mind you taking over my TV, man.
I know, you know, you're lucky I'm not going to take your remote from you, Dale. So you're going to be fine.
Thank you, buddy.
Can keep the remote. This is the dollar index, and you can see on this 4-hour chart that we are getting towards you know, reading
70.
and overbought reading above 70, but you can see we're at the 127% extension. We have a, you know, bullish pennant that really points higher. I mean, you look at the dollar index, there's no reason to really fight this as far as the chart goes. Although you can see that relative strength is clearly divergent. I mean, this is, you know, this is a high. That's the previous high when we were matching up the previous highs. You can see the rally breaking out. Price is breaking out, relative strength is not. That is a very divergent chart.
It's at least a
warning.
warning
It doesn't
sign,
require
isn't it?
any, like, you don't have to dig into it to figure out if we're divergent or not, right?
Yeah, good eye.
Yeah, I mean, that's just that's something that doesn't mean that it's going to stop. And one of the things that I think we should, you know, be kind of clear here when you're looking at relative strength. This one might give us a good view, but this can happen first and foremost, right? You can go up and test this trend line, and then it can break that trend line too. So you imagine if the relative strength actually breaks higher here, what does that do to the dollar index? Well, more than likely we're breaking.
Do what
higher.
the end did.
Yeah, exactly. Like I always go back to I always go back to, oh geez, what was it? When Abe, you know, RIP, you know, he when he did his three-prong economic approach back in 2004, was it 2004, 2001? I guess. When was that? That wasn't actually, yeah, I guess it was that. 2000.
Abe was 2012.
2012. There's 2013. Yeah, 2012. This breakout was right here. And I remember, you know, some of you guys know who Boris Schlossberg is. I remember, you know, I was at this hedge fund office where I was trading out of. I just moved back to Arizona, and I was working out this hedge fund office here using some of their space. And Boris was on CNBC, and he kept fading the dollar yen. He got on CNBC like 3 days in a row, and he kept just talking about, you know, this move. And I was like, wow. And that was a good example of relative strength that was divergent that kept on going. So it does happen. Bro. Oh yeah, it'll.
I have.
Oh yeah, I mean, you know, who hasn't faded, you know, big moves. But anyway, go ahead.
For the record, when Abe came around, I was in Tokyo, and the people in the Japanese dealing room were saying themselves, "This is not going to change much." Where I said, like, wow, this is probably the bottom for dollar yen, and now we're going to skyrocket. They said, like, well, no, I don't think it's going to change much. There weren't many people at the time where we got elected, and he put forward his program. There weren't too many people who actually thought the Japanese yen was going to weaken materially, thanks to Abenomics. And then the rest is history.
That sounds a bit like the chairman of IBM saying in the, what was it, late 70s, early 80s, there's only room for about 5 computers in the whole world. That's what he said. Good call.
You know,
yeah, he meant in a household, I assume.
For a household.
Yeah, that was a crazy move back. I mean, because I wrote it on the long side. A lot of people that were listening in, that are maybe even listening right now, that were listening into the Morning Edge way back then. I mean, I captured a lot of this move, but I missed the second half of the move. I mean, I just didn't expect that much of a move. But yeah, that is a great example of divergent relative strength that just doesn't matter. And you're looking at a monthly chart right now. But hey, let's talk a little bit about this yen. You know, Kman, here we are. You know, we're at 145. I thought we were going to get here. The really, I was saying this in the chat room, in the ForexAnalytix chat room last night. I said, you know, we were here at 140, 144 last night, and I'm like, this is great. You know, we're going to reach 145, and I'm going to, you know, talk about what a great rock star I am, as I sold it yesterday at 142. I took profits at 142 from below 140. And here we are at 145. I was half joking, but here we are. I mean, how much further can this thing go? What are your thoughts here?
Well, I mean, that's what I'm saying. Technically, we are at targets here, right?
Yeah, technically we are. But what does that matter?
Several extensions, several And even psychologically, people were looking at this 145. So we can't exclude some profit taking. But to turn the ship around, we need yields to come off. We need oil, gas to come off. We need commodities to come off. We need we need a lot of things.
Wait, you just said oil and gas. Like, if crude oil broke through, let's say 85, because that's obviously a huge support for crude. If it broke 85, you think that would strengthen the yen?
Well, I mean, it should in theory, because they are still importing everything. The nuclear plants are far from being restarted yet. So that's what I was saying earlier. There should be some form of correlation coming back sooner or later. But I think the market is now in a show me what you've got, Ministry of Finance scenario,
which is a whole lot of big bag of nothing, right?
Yields are going anywhere. So we're in testing the MOF resolvents territory here, in my opinion. And so I think it could be enough here, but as we know, the market can remain irrational for longer than we can remain solvent. So is it 147? Is it 160? Who knows?
I mean, look at the 30 year.
And it could be 145 and done.
But I mean, yields are like really on the cusp in the 30 year of breaking out. I mean, like seriously breaking out. I mean, that's scary, right? Especially if you're out fading the dollar. But let's you know, let me see. Steve, I just heard your voice. Stelios, Ryan, you guys have any other thoughts on the yen while we're here?
Yeah, since we mentioned Abe, the late Abe, Abenomics was a really reckless, idiotic type of three-arrow policy that inevitably succeeded in one thing only, and that was devaluing the yen. Now, somebody might ask, what is the benefit in that? Yeah, I know people will start giving me the theories that, you know, a lower FX rate will help Japan with its exports. Never had really big problems with its exports, because at the same time it damages other things, right? Because at the end of the day, I've said it before, what is the job of economics and economic policy is to make the people of a country prosper more, right? So it's all about the purchasing power of the people. That's at the end of the day the only thing that matters. And supposedly we are supposed to be taking care of as economists or whatever, right? Then as a continuation of that, because you know one mistake brings the other, we've had the policy of buying, in essence, committing to buy indefinite number of bonds if needed for yield curve control. And my comment then was, if they're promising that they're going to be buying indefinite, you know, number of bonds to protect the yield curve control, that's exactly what the market is inevitably going to force them to do: buy an indefinite number of bonds. In my opinion, this is a monetary Roach motel that somebody can check in and can't check out from, and there's going to be a very, very bad ending.
So bad
it's a good thing, you know, Steve, it's a good thing you didn't do the eulogy for Abe.
Yeah.
Let's I'm gonna go out and put a noose around my neck in the backyard. I'll be back in just a few minutes.
No, I mean,
you know,
that would have been a great eulogy. And then
I'm gonna go contemplate committing suicide now. Thanks, Steve. Appreciate you. No, just kidding. No, but seriously, Steve, what's the outcome
in my
here?
opinion, the yen is going to be in more trouble in the
okay, so we're gonna
ahead.
see the yen at 200. Got it. Okay, got it. All right.
It's not unlikely, of course, right? Nothing moves in a straight line. Even strong trends at some point, due to positioning, etc. I mean, I'm not advocating that somebody should try to chase the yen tonight, right? Today, you know, you need to have some appropriate risk reward, etc. But I'm afraid that the yen is going to be in a lot more trouble than it currently is in.
Yeah, well, speaking of which, it is actually at some really it's been our target highs at 145. I did not think we'd be here this morning. especially after yesterday's move. But 300 pips later, here we are. We're at trendline resistance, a lot of resistance up here. So you got to be careful chasing it, especially ahead of the ECB tomorrow. Let's talk about the ECB. Ryan, you obviously pay attention to what all is happening in Europe, especially with the Flow Show. If you guys and gals don't know, we have the Flow Show, which is with Ryan and Kman, both of these two gentlemen, early in the morning. Well, early for me because I'm asleep, but in the middle of the night actually. But it is a free show that we have here. You guys obviously talked about the ECB to death, I'm sure. But tell us North American traders, what are you guys expecting out of the ECB tomorrow? I mean, are we going to get a 75 basis points? Or are we going to just get 50? I mean, there's a lot of speculation that Lagarde is only going to deliver us 50, and that's one of the reasons why the euro is trading so heavy. If we get a 0.5%, does the euro trade to 97? What are your thoughts, you guys?
Actually, we were going to talk about the ECB tomorrow. We spoke about the BOC today.
What?
Bank of Canada.
We spoke about the BOC today. We're going to speak about the ECB tomorrow on the show.
Oh, so you don't want to let the cat out of the bag. Well, just give me a quick number. Are we going to get the 0.5% or 0.75%, based on your opinion?
My opinion is, again, it's what they should do and what they will do. I think they should go 75, but we know the ECB has a tendency to disappoint. Either way, it's going to be resolved in euro dollar. We're either going to be trading parity or above, or probably below 98, one way or another, come tomorrow. It just depends. It all comes down to Lagarde. If it's 50, the market's going to get caned. If it's 75,
I'm done betting on a hawkish Lagarde. That always leads to like
she's probably going to be hawkish.
Yeah, I mean,
fade the break.
Right. How about you, Kman? What do you think?
About who?
Lagarde. 50 basis points or 75 basis points. What do you think?
Well, I think they will do 75, and then it will depend on what she's been saying, because what she will say.
We could definitely get a dovish hike, right? I mean,
I think it could be a dovish hike unless she talks about QT.
Okay. All right, Stelios, you got any opinion?
Isn't the size of the hike these days isn't that important. Okay, it's how high rates are going to go. So they could hike 50 and say, but we're going to raise rates to 5%. That's hawkish.
Yeah. Right.
It's where they're going. It's the message and the path that's important now, not the size of the hikes.
The terminal rate, Ryan.
I agree on that
point.
So let's hear Stelios. What do you have to say before I turn our attention to my favorite topic, which would be Bitcoin?
I think they should. I think they should be, and they probably will be trying to front load a little bit the hike. So I think although the ECB is always dovish, I think it's going to be 75, and then we see.
Okay, well,
choose your words wisely, my friend.
I know. Controversial.
There is no ability of front loading anymore. Front loading is have long passed as a possibility. You know what I mean?
So we've got a whole range of ideas, but I think we all tend to agree that the euro is trading heavy. But I have to say, it still is trading just around 99 cents. And I still don't get why it's trading at these levels, but it is. And that's a fact that we have to contend with especially if you're shorting the euro
for 2.5 months.
You're banging your head up against the wall. If you're shorting the euro right now with all the, the ideas that, Lagarde's going to be, she's going to be dovish, energy problems are going to be an issue in Europe, blah, blah, blah. Any other issues that you want to throw at the euro, if you are shorting it down here, it is a very frustrating trade. And that is a fact. And that's something that we do have to keep in mind going to tomorrow. But let's talk really quick. Let's talk about Bitcoin, because, Bitcoin is trading, just so everybody's aware, we're back below the spike highs from December of 2017. A lot of people, your guest yesterday was just talking about how, there's so much accumulation down here at Bitcoin at 20,000. And then all of a sudden the bottom fell out of it yesterday.
Yeah.
We almost completed a bear flag pattern, a pennant that we've been following. We're pretty much there, but What happens if Bitcoin breaks through? You know, everybody's buying Ethereum on this merge. That's not doing so hot, right? I mean, the bottom, thing crapped the bed yesterday. So, you got Bitcoin and Ethereum that are approaching pretty key lows. What happens if the S&P trades below 3,600 and Bitcoin below, let's just call it 15,000? What happens then? Does the world come to an end?
A lot more Rolexes and Lamborghinis get sold.
Outside of any fundamental comments, there are some technical truths that I think nobody that has a set of eyes and the basic understanding of mathematics can refuse. One truth is that in the vast majority of the days, months, weeks, Bitcoin has been better correlated to something like the Nasdaq than anything else. So that's one reality that nobody can deny. Reality number two, we've had a lot of bubbles, and most likely, I'm saying most likely to put my personal bias outside of it, cryptocurrencies are included. Just a reminder, despite the sell-off that we've had, the number of cryptocurrencies have kept increasing. We have now surpassed 20,700 of them.
That's awesome. Everybody's a gazillionaire.
Yeah, exactly.
Here's the total market cap if you guys want to see it on a monthly
another
basis.
technical reality is that if you remove the ticker name from the chart and you show this chart, the Bitcoin or the Ethereum chart, on a daily basis or smaller time scale to anybody that has done some basic technical analysis, and you ask them, is this a bear trend? Is this some kind of a bottoming pattern or whatever? I think 99 out of 100 people that have done technical analysis will tell you this chart looks horrible.
Yeah. Well, the target that I have here, just, on this, an AB equals CD pattern takes us to about 11K. That would be, previous highs from way back here in 2019, 2020, to lows from 2020 over here. So, I mean, 11,000 looks possible. And this chart hasn't changed at all, over the years that we've been, showing it. So it looks pretty ugly. And you look at Ethereum, and a lot of people argue that Ethereum's like, really the next Bitcoin. It might be, but it wouldn't stop it from, seeing 800 first for those of you that, and that's half of its current value. So for those of you that are
merging on the highway soon,
we know it might have been merging on the highway from a 2-lane highway to a single lane highway, maybe. I don't know. Hey, let's just take a real quick look around. We the Aussie dollar, as much as I have been wanting to buy it down here, I've kind of stayed away, thinking that we have a complex inverted head and shoulder pattern. If we do, supports are going to be around 65 cents. That means we have a cockeyed basically neckline with shoulders that were going to be virtually similar, which is going to take us a little bit lower. Kiwi continues to break lower. That was the chart of the day yesterday. If you don't know where to find those for free, you just go over here to our blog, and we have a lot in Spanish too.
And Greg called that last week when he showed up.
Yeah, you know what? Break. Greg is, Grega. No, I'm just kidding. He does a gregreat job. And actually he did the week ahead video for us this weekend. So great call on Grega. The dollar
long
Swiss
term, I know you want to buy the Aussie still.
I do. I'll do it around 64, 65 cents. Not here. Okay. I tried it last week at 68 something, and I took a 30 pip loss, and I'm like, not doing it. We're too elevated in risk. If the S&P sees 3,500, the Aussie should see 65 cents pretty easily. I'm just I think it's pretty safe to say. You got other pairs like the US dollar, Norwegian krona still working an inverted head and shoulder pattern higher. You've got other markets. I mean, you got the Nasdaq looks really weak, big failures there. Dow, big failure at the 200-day moving average. You've got crude, which, by the way, everybody, I know I got heckled a lot last couple months or a couple weeks ago thinking that we might see 75, but with the false breakout above the 200-day moving average, I don't think 75 is that far off, especially if we break this trend line right here. Now, do we have any data coming out today, Stel?
Trade balance. So US trade balance is not massively important, to be honest.
It used to be.
It used to be, and it will be one day. And here, there's your data flash, and the trade balance just came out a little worse than expected. And it is weighing on the dollar just a hair. We've got the euro back, towards 99 cents. But I want to say that these are all the tools that are included with ForexAnalytix. I do want to say this, that we do have a guest coming on, and we only have half. What?
First time guest.
A first time guest. Oh, that's exciting.
Aaron Swenlin's going to be with us.
Hey, Dale, how many interviews have you done over the years with us?
I think around 1,000.
Yeah, if you guys want to see all the people that Dale interviews, and you can see pages and pages and pages of people like Adam Button, David Keller, Gareth Soloway. This is just from last week. Julian Brigden. I mean, we have some great guests that Dale, fishes these people out. He hunts them down and brings them on the show. Make sure you guys stick around, because these are people that a lot of them are people you'll see on Bloomberg, CNBC, Reuters, different news outlets, Fox Business, and Dale brings them on, talks to them for a long time. So
I learned from all of them.
Yeah, I mean, it's great. And so stick around for that interview. And
speaking of interviews, one brief announcement. I believe people will be interested. There's going to be a new Trader Summit event coming, probably 21st, 22nd, and 23rd of October. We've already started organizing it. So, be ready for it.
And these are the, Trader Summit. If you guys don't know that, if you look at the past events that we've had, so April of this year, you can see just all the headliners that we bring in, that came earlier this year. We'll have it again, coming up in September, or in October, in October. So that's going to be exciting. But I want to say, if you guys want to be part of the ForexAnalytix community, make sure you join us. It's only $1 for 10 days. Our prices are going to be going up. For the first time ever, right? No, is it first time ever?
First time it's the second time, yeah.
It's the second time in 6 years, and the last time was 4 years ago. So our prices will be increasing this at the end or near the end of this month. So make sure you take advantage of ForexAnalytix now. And Dale, I'm going to pass you over. Thanks everybody. Thanks team for being here. We'll see you guys in the ForexAnalytix community. We'll see you on the Morning Edge in about 45 minutes.
Thank you, Blake.
Thanks, guys.
Aaron Swenlin, what a pleasure to meet you.
Thank you so much. It's great to be here. First time guest, indeed. I have to say, I am on the West Coast, so I'm seeing part of the day that I generally do not.
Okay, well, I am too in San Diego. It's hell on earth. Right now with the temperatures and threatening of rolling blackouts and fires about 5 miles away from me, and thinking of getting out of here.
Yeah, I have to say,
yes,
I'm on that list to leave too.
Yeah, I'm on. I hear the owls when I get up. I get up at 4 a.m. even before the roosters. So, Aaron, great to meet you. I'm familiar with Decision Point and your father, who, has been on financial media for many years. And you guys produced an excellent product, elite analysis over the years. And appreciate you being here with us today. We do have a screen share if you want to show any of the charts. Otherwise we could just, okay, there you go.
Yes.
All right. Okay. So, I went to your website, and you have these things called diamonds. Is it diamonds in the rough, or what?
Yeah, it's my Decision Point diamonds. So I do two different publications. One is our decision point alert, and that does kind of the overall market review. You get dollar, gold, oil, bonds, gold miners, Bitcoin yields. All of that is in the decision point alert. And then I do these decision point diamonds, which are diamonds in the rough that I find from my decision point scans and present to my readers Tuesday through Thursday. And then we do a recap and a subscriber only diamond mine trading room. So a lot of fun, have kind of a hand-in-hand products here. I am bringing in a big special for everybody who is here that we ran earlier. And I think that everybody will enjoy. But, you know, our products are pretty easy to use and read at any particular level you are at in technical analysis. And really the best part of it is they're absolutely and totally inexpensive for the professional quality of what we do. But mainly what we want to do is not just leave this kind of information to those who can afford, you know, thousands of dollars a year or month, and make our analysis really available to all various traders out there. So, you know, we have some big money managers, but we also have, you know, the small retiree trading traders. So we cover it all for everybody. And I'm going to offer a special, and I'll put it in the chat, but basically, I'm going to give you the first month of both or either for $14 your first month. So you have an easy way to try us out, very little at stake there for you. And it gives you a great way to come in and see what we're doing here at Decision Point.
Okay. And the main coverage is equities? It's
yes.
mainly all equities. Okay. So let's take a look at some of the things that you were ready to talk about. You know, right now, you know, after that big rally we had off the June lows, I guess more people are leaning towards the resumption of a bear market, and that we're going to take out those lows. Are you in that camp? Because I'm seeing some sentiment indicators like 11% bulls in S&Ps, and it almost feels like people are even more bearish than they were in June.
Yeah, I understand. Yeah, I'm with you there. But really, when you look at some of the charts, Brett, yes, there are some oversold indicators there. But in the grand scheme, I mean, when you look at the VIX, let me see if I have a better picture here of the VIX over time. Here we go. You can see that the VIX, you know, back in June, I invert my VIX. Let me just say that right out the gate, because I know that confuses people, mainly so I get oversold on the bottom and overbought on the top. So I apologize. I know everybody's like, what is that? But if you look, I mean, the VIX was at much, much higher readings than what we're seeing right now. So to me, I don't see the sentiment being bearish enough at this point. And really, I'm basing that mainly on the VIX. But really, if you look at like new highs, new lows, let's see if I have my chart ready here. Again, we're not seeing the kind of new lows we had back in June after this big decline, or even back here in May. So, you know, in my opinion, we're not really oversold enough. But, you know, breadth-wise, there certainly are, you know, reasons why you would think that we should be. Let me show you my bias assessment chart. And this is proprietary chart to what we show in Decision Point Alert. I'm going to be showing you a lot of charts from that particular publication. But the one thing I really wanted to highlight for all of you, because it's the only thing that it's exclusive to us. We just came up with it a couple of years ago, and that is our Silver Cross and Golden Cross indexes. Nobody does this, and it's really very intuitive. Everybody's familiar with a Golden Cross. Right. We use exponential EMAs. A Golden Cross is when that 50-day crosses below the 200-day. So what we decided to do was look at how many within the S&P are actually on golden crosses, you know, have a 50 above their 200. And right now that's low. That's at 37%. But again, we saw lower readings back here even in July on that Golden Cross Index. But you can see that when we're in a nice bull market, you're going to see about 80 to 90% of the stocks above have a 50 above their 200. But we decided to go one step further and do a Silver Cross Index. And the Silver Cross we call a 50-day EMA positive crossover. So this tells you how many stocks right now in the S&P have their price, have a 20-day EMA above the 50-day EMA. And again, you can see that those readings were very, very oversold. We're not even close, really, on that Silver Cross at this point.
Okay. So instead of interpreting it as the market is holding up, some of these indicators are holding up pretty well, you're saying it's just getting started and that we could very easily end up with the same kind of readings we had back in June. So
yes,
there's more to go to the downside. That's your narrative.
Absolutely.
Okay.
Of course, we do, look at the percent above their 20, 50, and 200. And again, these are really, really low numbers. But, we hit 0 back in June on the percent of stocks above their 20. I mean, this is still extraordinarily low. It's definitely an oversold reading, as are these. But my point is that we're just not there yet. I mean, I don't see why the market couldn't continue lower. I know a lot of people are, again, talking sentiment, talking the participation being so low, which is true. But it's not as low as it was back in June. So we are definitely bearish moving forward. I saw a lot of those charts earlier before I came on, and I think a lot of people are in that same camp. And today I very much expect, let me get back to this chart back here. I very much expect this rising trend line to fail. I mean, we dipped down below it a little bit yesterday. This support level as well. I mean, this should be a strong area for a bounce. I mean, if the market was going to bounce, this is really the place to do it, off this rising trend and off this support level. So, but I don't see it happening. I wish and hope that I am wrong. I was very much hoping my colleagues who were telling me this was the end of the bear market here, I was very much hoping they were right, but I really was thinking they were wrong.
I almost thought it was too obvious where it stopped, right at the 200-day up there.
Absolutely.
I mean, there was a 200-day right at the highs above 4,300. I go, could it be that easy? And, I'm pretty jaded after trading for all these years. And when I see something that is so obvious, it reminds me of someone you probably don't remember, a guy named Joe Granville.
I do know Joe Granville, not personally, but
but he used to say what is most obvious is obviously wrong. So I mean, that was his type of contrarian nature, but it definitely was a great trade in hindsight, shorting it up there.
Absolutely. And there's, like I said, if it's going to bounce, this is the place. But of course, there are certainly support levels, below this that we can certainly get to and bounce. But, my father, who I have learned a lot from over the years, what we talk about is Carl Swendlin, yes. And what we've talked about is, a lot of people haven't lived through bear markets right now, and we have, which is another reason we think that our product is so good, because we actually have that perspective. We're not looking at 2020 and 2008, but even 2008, I can't believe how long ago it was. But even then, we don't have a lot of people who experienced that.
Or 2000.
Yeah, exactly.
Yeah.
There's some pretty rough times out there. And the main thing is, and stockcharts.com did on Stock Charts TV, I helped host it. And it was, you can find it on YouTube. And we talked about bear markets and the history of bear markets. And we brought in some analysts, like Mish Snyder was there from Market Gauge. I can't think of the others because they were recorded when I wasn't there. But really, a lot of my colleagues out there that have lived through it have said often about this, that, you know, they last more than a month and a half. That
Yes,
they can go on for months and years. So I think that we're kind of in for one of those times where it's just going to be slowly going downward and just grinding traders even more, sadly, than what we're experiencing now.
Are there anything, I mean, in these bear markets that we've gone through before, you know, this bear market is kind of like, and in fact, the bull market was the same way. Seems like everything inflates together, goes up together. And I'm talking about different asset classes. I mean, even during this decline with the Fed tightening, what do interest rates have to do with agricultural commodities having the same chart pattern as gold or the inverse of the dollar or the S&P? Have you ever experienced a time period in the market where it's almost like a balloon, where everything goes up together, and then when the air is taken out, everything fails together?
Yeah, I think that this is a little bit more unique in that the entire market is being really hammered right now. Again, I don't have to tell you that. You know,
I mean, no
that's
flight
been
to
kind of the problem
quality.
I've had, right? Because I have to do these decision point diamonds. I have to bring in stocks that, you know, should go with the tide of the market. Well, of course, the tide of the market is going down. All of my scans are coming up empty. I mean, seriously, none. And I usually have 100 and something stocks to look through. So, you know, looking at the industry groups, I wrote an article last weekend, the fact that on stock charts, they cover 104 industry groups. And at the time, only 2 had rising momentum, 2 of them. And those were gold miners, which we know are in trouble, and oil equipment and services, which is, you know, obviously tied to oil, which is struggling right now.
Right. So there's nothing. I mean, you're short the world and long the dollar.
No, there really isn't. I will show you the diamonds that I did present yesterday to my subscribers. I have no idea how these are going to turn out. We actually have done better than
when they don't work, Aaron, do you call them cubic zirconiums?
No, they turned into coal. They were diamonds in the rough, and they turned out to be coal. So,
well, even coal is expensive. Santa couldn't get any last year, so
that's right. That's right.
You could have been naughty last Christmas. So,
so I have 3, and 2 of them are in the real estate sector. And again, I've been telling my subscribers, I mean, this is really a learning experience. This is watch list time. You know, yesterday real estate had a pretty decent day. And so it wasn't surprising that after I manipulated my scans, and I'll tell you, I have to manipulate them to death right now. You know, I have to release the idea that you have to have a 50-day EMA above a 200. I mean, that's always the basis of my scans, but I have to remove that because there are so few stocks with a 50 above their 200. I mean, you saw that bias chart. So it's really tough to find them, but I did find 3 yesterday that I thought I would just bring to the table today for the viewers. And the first one was apartment investment management. So actually, let me show it to you through my the actual report. That way you get an idea of what they look like and how that works. So, all right. So I always do a little bit of an opening. I also will post, you know, what my runners up were, you know, the short list, if you will, after I go through all of my hundreds of charts. So I do 3, but I also give you, you know, a couple to look at as well. I have the recording link and registration for my diamond mine. Decision Point has a trading room that we do for free on Mondays. You can register for that right off of the front of our website. And Carl joins me in that trading room, and Stock Charts TV does now record it, so you can see the old ones on YouTube. But basically, I give you the name, I give you the earnings date, I tell you what they do, and then what predefined scans on stock charts that triggered on that day. So you get an idea I don't follow point and figure, but there are scans in there, and I figured people should know who follow it, what triggers happened. And then of course I give my write-up on the daily chart. And in this case, the RSI is positive, it turned up. My PMO, this was the thing, I couldn't find PMOs that were rising. I mean, that's a pretty big one. When you're looking for stocks, you do want it to have rising momentum. And most of these are showing deceleration from their declines, but a lot of them haven't turned up yet. But you've got stochastics rising. And then I do relative strength studies. I do not only the stock against the SPY, but I also look at the industry group against the S&P, and I look at the stock against its industry group. So this is what tells me, okay, do I have a strong stock within that industry group? Well, if it's performing relatively better than its group, well, absolutely.
Right. Do you recommend shorts? I thought I heard you say something about shorts.
I do have a scan, and I haven't done it, and I think I'm going to switch to it because I am struggling to find. I'm struggling to find things on the buy side. But I do have a scan called my Diamond Dog Scan, and it looks for obviously dogs. I love dogs, but that's the euphemism they use. So, I have a scan that does that, and I can present shorts. It's just, for me, shorts, the thing I don't like about them is, your potential gains are bounded. It'll only go down so far. So my preference is to be on the buy side, but sometimes, I do ETF day on Wednesdays, and, the ETFs that I've been presenting have been pretty much inverse ETFs. I mean, they're the only ones with charts that look good. So that's what I try and bring to the table. So, this has got a falling wedge, had a nice rally yesterday. So I'm looking for an upside breakout here. I always put a stop level in. My stops run between about 5 and 8%. And I do like to try and line them up with support levels. It's sort of an easy way to do it, but it's worked for me. But I always put those stop levels. But then I go one step further, and I always show a weekly chart, because, you really do need to get the overall picture. Obviously with technical analysis, you kind of want to go big and then get small. But everybody looks at a daily chart first. I mean, come on, we all do. But after that, I like to bring that weekly chart in. And honestly, this looks like a really nice bull flag. And, the weekly momentum is looking great.
Nice. Yeah. Do you look at any like uranium or things that
indeed
are okay? Because you had the news out of Japan going back to them, and Putin has control over a lot of uranium, so he could squeeze people that way too.
Yes.
Yeah.
So I'm going to look for my last uranium chart here.
And lithium. I'm like you. I'm looking for where there might be opportunities due to what's happening here on the global stage. And
absolutely,
up until the correction in commodities, people were calling it the shortage of everything. But now it's only the shortage of certain things. Right.
Absolutely.
Yeah.
All right, so let me just open this one for you.
How long have you been at this? When you were, in grade school, was showing you this stuff?
Yes, actually, you mentioned Joe Granville.
Yeah.
My dad was a big fan of On Balance Volume.
Yeah.
And so back in the day, before there were computers, he would get pencil, paper, and a ruler out with the Barron's newspaper. And I would sit down, and in the, on those spreadsheets, I would write in pencil and then calculate what the on balance volume was. So I would do that for my dad back. I think I was in junior high at that point. Wow. And in high school, I was still kind of following it, but mainly because, and I don't know how many LA folks are watching this, but we used to go home. I was working at the part-time at the engineering company he was at. and we would go home at lunch and watch Gene Morgan on KY.
KYTV. Yeah, I used to be on there.
So I loved Gene Morgan, and I always
charting the market with Gene Morgan.
Charting the market, and I always watched that in high school. I was like, what a great job, like seeing these charts and reading them for everybody. I mean, different every day, you know, how exciting is that? And so
that studio was on Sunset, wasn't it?
Yes. Yes.
Okay, yeah.
So so I grew up with that. And then when I hit I guess I'd already graduated college and I was in the Air Force. I was Air Force ROTC. And my dad called me on the phone. He was trying to come up with indicators, and one of them was the PMO. And that's our price momentum oscillator. It's like the MACD PPO, but it's our own calculation. And he couldn't do the algebra. So he would send me the formulas of, okay, this is what I'm trying to find. And here's all of the things that I have in it. Can you solve for X, you know, or solve for Y? And I was like, oh, this is fun. So I helped him develop those. He, you know, developed the formulas that we use in a lot of our indicators, mainly because I did, you know, those spreadsheets and, you know, helped with the formulas.
It's in your DNA.
Yeah, it is. And I'm a writer. He's a writer. My brother is a writer. He was in the animation business, and my daughter just graduated from New York Film Academy as a screenwriter. So
wow, creativity. That's the fun part of the business.
Yes.
Isn't it?
So I do uranium, I do lithium. Really, I cover all the ETFs and, you know, wheat, corn. If they look good, you know, I certainly am going to present them. And uranium's looking very nice. I mean, it's kind of been choppy right here after getting above the 200 EMA, but, you know, it hit the overhead resistance, kind of is doing its pullback. But, you know, in the big picture, I see a reverse head and shoulders with a head, left shoulder, right shoulder.
Buy breaks.
Yeah, it really does look pretty good right now. And with, you know, rare earth materials in general, I was looking at the Remix chart. I call it Remix.
And they were a great band.
Right.
I
had all those.
Most of our audience won't remember them, but go ahead. You know, go watch your rare earth
I've been
video.
watching the rare earth materials because obviously this is an area with the war and everything that's been, you know, a big area. But, you know, the double top on the rare earth materials has really kept me away from presenting it as a diamond. But, you know, if we get another breakout here, we could start forming a, you know, a falling wedge again, and that would be bullish. The chart's starting to shape up, but you know, as I tell my subscribers, I do not buy anything. And I'm dead serious here. I do not buy anything where the PMO is pointed down. You know, if it's got negative momentum, my risk level goes up so much. And so it's just not worth it. I'm a swing trader. I'm a momentum trader. Drives my dad crazy because I'm always looking for confirmation before I get into something. I mean, the PMO could turn up, but it's like, well, I need to see it get above the 50, or I need to see this happen. And it serves me well, but obviously you lose out on the beginning of some moves.
Yeah, but your hit rate's probably higher because you wait for confirmation. Because
I believe
like
so.
Dad,
yes,
I like to hear the ice crack and anticipate it sometimes, and then kick myself. So, you know, this was a great interview, Aaron. I'm so glad that our paths crossed on Twitter and I was able to meet you and talk to you. I really appreciate your time with us today. Yeah,
sure.
I'm getting like in chat 5-star interview. So, you know, anyone who, you know, is interested in stocks, you could tell after 2 minutes that you're hearing a pro. And
thank you so much. And for those of you interested in that $14 intro price, just use the coupon code BEARS, BARS. I'll put it in the chat box. But if you just go to our subscriptions and when you apply, just use that coupon code BEARS and you'll get your first month of one or the other or both, however you want to do it. You can get the bundle or not, and you can get it for $14. Just use that coupon code BEARS.
Thank you. You're now my trading warrior sister.
All right. Sounds good.
Great meeting you, Aaron. And I'm a fan and rooting for you and your dad.
Oh, thank you so much.
Have a great fall trading season, and perhaps we could do this some other time down the road.
Yeah, I would absolutely love that. So definitely give me a call and hit me up on Twitter. For those of you who want to follow me on Twitter, _decision point. Yes. I'm not prolific in my tweets, but they're usually pretty good ones.
Okay. That's confidence. In my extremely humble and accurate opinion, I agree with you. So thanks very much, Aaron. Great meeting you.
All right. Thank you. Bye-bye.
Okay. Bye-bye. Everyone, that's a wrap. Take advantage of Aaron's generosity, and you could join the team in 15 minutes on the Morning Edge. See everyone tomorrow for the ECB. Adios. And remember, don't just count your pips, count your blessings. See everyone tomorrow. You're very welcome. Thanks again.